Most people lose money investing because they choose the wrong app. Let me show you the right one. Welcome to your investing journey. Today we're going to focus on the foundation of the core features every investing app must have to help beginners and experienced investors alike grow their wealth efficiently. Choosing the right investing app isn't just about flashy interfaces or brand names. It's about functionality, profitability, and usability. By the end of this action, you'll understand what to look for in an investing app so you don't waste time or money on the wrong platform. Why profitability comes first. The first and most critical feature of any investing app is profitability. This may sound obvious, but many beginners make the mistake of focusing on user interface or gimmicks while neglecting the actual potential for returns. Profitability in an investing app means the app enables you to grow your money over time through smart, disciplined investing. This includes access to diverse investment options, stocks, ETFs, mutual funds, bonds, or even alternative assets. Low fees and commissions. High fees eat into returns over time. Even a small 0.5 to 1% annual fee can compound into thousands of dollars lost over a decade. Research tools and insights. Apps that provide clear, actionable market research can help you make smarter investments. When evaluating apps for profitability, consider historical performance data, the variety of investment products, and whether the app offers automatic rebalancing or goal tracking. An app that maximizes returns while minimizing unnecessary fees is the cornerstone of building wealth. The importance of a simple, easy-to-use app. Even the most profitable app is useless if it's too complicated to navigate. Beginner investors often feel overwhelmed by cluttered interfaces, jargon, and complex dashboards. A good investing app should be simple, intuitive, and clear, guiding you through every step from depositing funds to executing trades. Key elements of usability include simple dashboard, a clear summary of your portfolio, gains, losses, and performance trends. Easy navigation, access to investment options, research tools, and account settings without digging through multiple menus. Educational resources, tutorials, FAQs, and guides that explain financial terms and investment concepts. Simplicity, reduces stress and improves decision-making. Apps like these allow beginners to focus on strategy rather than getting lost in the interface. Investing in any amount with fractional shares. Not everyone can invest hundreds or thousands of dollars at a time. This is where fractional shares become invaluable. Fractional shares allow you to invest any amount, buy a portion of a high-priced stock like Amazon or Tesla even if you don't have $3,000 to spend. Diversify easily, spread smaller amounts across multiple companies without committing large sums to one investment. Stay consistent. Regular micro-investments add up over time, a concept known as dollar-cost averaging. Apps that offer fractional shares are beginner-friendly and encourage consistent investment habits. Without this feature, you may be limited in diversifying your portfolio or reaching your goals efficiently. Why multiple account types matter. A smart investing app doesn't just help you invest, it helps you invest strategically. This means offering multiple account types tailored to your goals. Key account types to look for include taxable accounts, standard accounts for general investing with no special tax treatment, retirement accounts IRA, Roth IRA, 401k tax-advantaged accounts to grow your retirement funds efficiently, education savings accounts 529, custodial accounts for long-term educational expenses. Choosing an app that offers these options allows you to minimize taxes legally and align your investments with your specific financial goals. Apps that limit account types may cost you in lost tax benefits or flexibility down the line. Making consistent investing effortless. One of the biggest mistakes beginners make is relying on willpower alone to invest regularly. Life gets busy, and skipping months can drastically reduce your long-term growth. A top investing app should allow automatic transfers, meaning you can schedule weekly, bi-weekly, or monthly deposits from your bank account. Ensure consistent investment even during hectic months. Take advantage of compound growth, since even small, regular contributions accumulate over time. Automatic transfers make investing effortless and keep you disciplined without constant effort. This small feature often separates successful long-term investors from those who struggle to stay consistent. Let your idle cash work for you. Not all money you hold in an investing app will be actively invested. Many beginners overlook the importance of cash management. The best apps allow you to earn interest on uninvested cash or offer high-yield accounts for idle funds. Benefits include growing idle cash. Even you're waiting to invest money can earn a few %, which compounds over time. Safety and liquidity. Keep cash accessible while still earning returns. Reinvestment readiness. Having cash readily available ensures you can act on new opportunities immediately. Apps that ignore cash management may leave your money stagnant, reducing overall profitability. Extra features that make a difference. Finally, look for apps that go beyond the basics. Extra features can significantly enhance your investing experience. Some examples include sign-up bonuses or referral rewards. Many apps give cash bonuses for joining or inviting friends. Credit debit cards with investment rewards. Earn points that automatically invest in your portfolio. Educational programs and community. Access to webinars, tutorials, or forums to improve financial literacy. IRA matching contributions. Some apps match contributions for retirement accounts. While optional, these perks can provide real value and accelerate your growth journey. Putting it all together, we're focused on understanding the core features every investing app must have. Profitability, simplicity, and ease of use. Fractional shares, multiple account types, automated transfers, high yield cash management. Extra perks and features. Mastering these features before choosing an app ensures you won't waste time, money, or effort on platforms that don't serve your financial goals. For beginners, this is your foundation. Get this right, and the rest of your investing journey becomes much smoother. Now that you understand the core features every investing app must have, it's time to learn how to evaluate investing apps systematically. Instead of relying on brand hype or flashy ads, we'll break down investing apps into practical, easy-to-understand criteria that help you make smart choices. By the end of this action, you'll have a clear framework for assessing apps and avoiding costly mistakes. Understanding profitability. The first thing to consider is whether the app helps you grow your money. Profitability isn't just about past stock performance, it's about how the app enables your portfolio to grow efficiently. Things to check: fees and commissions. Even small fees can eat away at your returns over time. Look for apps with low or no trading fees, minimal account fees, and no hidden charges. Investment variety. Stocks, ETFs, mutual funds, or bonds. More options allow better diversification. Portfolio management tools. Automatic rebalancing, robo-advisors, or goal tracking help ensure your portfolio stays aligned with your financial objectives. Apps that neglect profitability may look attractive at first, but over time, fees and limitations can cost you significant money. Why ease of use matters. Even the most profitable app can be frustrating if it's confusing or difficult to navigate. Beginners especially benefit from apps that are simple and intuitive. Ask yourself, is the dashboard easy to understand at a glance? Can you quickly find investment options, account settings, and reports? Are tutorials or guides available to explain complex terms? An app that's easy to use encourages consistency and reduces the likelihood of mistakes. Investing without limits. Not everyone can invest large sums at once, and that's okay. The best apps allow you to invest any amount, even in tiny increments, so you can start small and grow your portfolio over time. This feature lets you spread your money across multiple investments. It encourages consistent investing, even if you only have $10 or $20 to put in each week. It helps beginners get started without feeling intimidated by high-priced stocks. Investing in small amounts consistently often leads to better long-term results than waiting until you have a large sum. Making the most of account options. A smart investing app should support different types of accounts, depending on your goals. Taxable accounts for everyday investing. Retirement accounts like Roth IRA or traditional IRA for long-term growth. Specialty accounts for educational savings or custodial investments. Having multiple account types gives you flexibility, potential tax advantages, and a clear path toward different financial goals. Setting it and forgetting it. Consistency is the secret to long-term investing success. The best apps let you automate deposits and investments, removing the need to remember or manually schedule contributions. You can set weekly, bi-weekly, or monthly transfers from your bank. Automatic investing helps you take advantage of compound growth. This feature reduces the risk of skipped contributions due to busy schedules. Apps that make investing automatic turn good intentions into consistent action. Letting your money work while it waits. Not all your cash will be actively invested, and that's fine. The best apps make sure your uninvested cash earns interest or remains accessible for new opportunities. Earn interest on idle funds instead of letting them sit stagnant. Keep cash liquid for emergencies or new investments. Smoothly integrate with checking or savings accounts for easy transfers. Even modest interest on uninvested funds can add up over time, improving your overall portfolio performance. Perks that go beyond investing. Some apps offer extra features that make your experience even better. These bonuses aren't essential, but they can accelerate growth and make investing more rewarding. Sign-up bonuses or referral rewards give you free money to start investing. Rewards programs or investment cards turn everyday spending into automatic investment contributions. Educational resources and community support help you become a smarter investor. IRA matching contributions or other special offers may boost your retirement savings. These perks can make a good app even better, especially when its core features are already strong. A simple way to compare apps. Here's a practical framework to evaluate any investing app: profitability, potential fees, investment options, portfolio tools, ease of use, intuitive design, and helpful guidance. Ability to invest small amounts consistently, account variety for tax efficiency and goal planning. Automated contributions to simplify investing. Cash management to earn on idle funds. Extra bonuses and perks. By scoring apps in each category, you can objectively determine which platform suits your goals best. Making the final choice. Once you've evaluated apps using this framework, narrow your options to the top 3 to 5 apps that perform well across all areas. Try demo versions or make a small test deposit to experience usability firsthand. Consider your long-term goals, risk tolerance, and investment habits. Remember, there's no perfect app. The goal is to find a platform that supports consistent, profitable, and stress-free investing. Taking action today. Start by creating a simple checklist based on this framework. For each app, mark where it excels. Note any limitations, highlight bonuses or features that stand out. Your investing journey. By now, you've learned what features matter in an investing app and how to evaluate them. Today, we're taking things a step further by reviewing the first group of real-world investing apps and seeing how well they match the framework you've learned so far. By the end of this video, you'll know which apps are beginner-friendly, which ones focus on growth, and which ones may not be worth your time. This is your first real look at how different platforms compare when you hold them to high standards. Let's jump right in. The first app on our list is Acme Invest, a platform that's become popular for its clean design and wide variety of investment options. When it comes to growth potential, Acme Invest performs well. You get access to stocks, ETFs, and mutual funds, all with low fees, something that plays a huge role in long-term profitability. The lower your fees, the more of your gains you actually keep. Its ease of use is one of its biggest strengths. The dashboard is simple, uncluttered, and ideal for beginners who want a smooth learning curve. If you're someone who hates complicated menus or overwhelming charts, Acme Invest keeps things refreshingly clear. It also supports fractional investing, which means you can invest even small amounts like $10 into big-name companies without needing the full share price. Account variety is decent, with both taxable and retirement accounts included, although it lacks education-focused accounts like 529 plans. Automation is strong too. Setting up recurring deposits is quick and easy. The only area where Acme Invest falls slightly short is cash management. It pays interest on uninvested cash, but the yield is average. Still, with occasional referral bonuses and beginner-friendly tutorials, Acme Invest is a solid choice for anyone who values simplicity and consistent growth. Next up is Bright Future, an app designed for investors who want more control and more features. Bright Future's growth potential is impressive thanks to access not only to stocks and ETFs, but also bonds and certain alternative investments. Fees are a bit higher than Acme Invest, but still reasonable considering what you get. The platform is slightly more complex but not complicated, more like upgraded. If you enjoy exploring tools and analyzing data, you'll appreciate the extra capabilities. Fractional investing is available, and account variety is one of the strongest of any app in this group. Taxable accounts, Roth IRAs, traditional IRAs, and education-focused accounts. That level of flexibility lets you build a long-term strategy with tax advantages. Automation is another strong point. Bright Future offers recurring deposits and even smart rebalancing, which keeps your portfolio aligned with your goals without manual work. Cash management is excellent, offering above-average interest rates on idle cash. And the extra perks? An investment rewards card that turns everyday spending into portfolio contributions, a pretty powerful feature. Overall, Bright Future is the perfect fit for anyone who wants both flexibility and long-term growth. Finally, let's look at InvestEase, a platform built for absolute beginners. Its growth potential is solid but not as broad as the other two. You get access to stocks, ETFs, and index funds with very low fees, but fewer alternative options. Where InvestEase truly shines is simplicity. The interface is extremely intuitive, ideal for someone investing for the first time. Fractional investing is included, and account variety covers the basics, taxable and retirement accounts. Automation is decent, though recurring investments with fractional shares are slightly limited. Cash management is useful, offering a high-yield sweep account, though rates tend to fluctuate. Perks are minimal, but for beginners, the clean, simple experience makes Investease an attractive starting point. Now let's summarize. Acme Invest delivers a balance of ease and growth. Bright Future offers the most features and flexibility. Investease is the simplest and most beginner-friendly. Your ideal app depends on your goals, your experience level, and how hands-on you want to be. Before committing, test each app with a small amount of money. Explore the automation, check the fees, try the tutorials, and track your experience for at least a month. This hands-on approach helps you build confidence while keeping risk low. This is your journey. The right app is the one that fits your lifestyle, supports your goals, and helps your money grow consistently over time. Now that we've explored the first set of investing apps, it's time to look at the next group. These platforms offer unique features, and by evaluating them using our framework, we can see which ones are best for beginners and slightly more advanced users. At the end of this action, you'll know which apps are simple, flexible, or packed with perks. Exploring next-level options, this group of apps blends beginner-friendly design with advanced tools. They're perfect for people who want simplicity without sacrificing flexibility. We'll focus on profitability, usability, account options, automation, and extra perks. Smart Invest. Investing made simple, Smart Invest is designed for people who want hands-off investing. Growth potential. Offers ETFs, index funds, and curated portfolios with very low fees. Ease of use. Minimalist design keeps navigation stress-free. Investing small amounts. Supports fractional shares, making it easy to start with just a few dollars. Account options. Taxable and retirement accounts available though. Educational accounts are limited. Automation. Automatic deposits and portfolio rebalancing make consistency effortless. Cash management. Idle cash earns modest interest. Extra perks. Beginner guides and occasional promotional bonuses. Verdict. Excellent for beginners who want passive investing without distractions. Growth Plus. More control and rewards. Growth Plus appeals to users who want extra features and flexibility. Growth potential. Access to individual stocks, ETFs, and bonds with moderate fees. Ease of use. Clean interface, though a few extra tools make the learning curve slightly steeper. Investing small amounts. Fractional investing supported for all securities. Account options. Taxable, Roth IRA, traditional IRA, and some specialty accounts. Automation. Recurring deposits and goal-based allocations simplify regular investing. Cash management. High-yield cash options outperform many competitors. Extra perks. Rewards cards that convert spending into investments and educational. Webinars. Verdict. Ideal for those who want more control, rewards, and flexibility while keeping things manageable. Easy Wealth. Learning as you invest. Easy Wealth is perfect for absolute beginners who want education and habit building alongside investing. Growth potential. ETFs, index funds, and limited stocks with low fees. Ease of use. Intuitive interface with step-by-step guidance. Investing small amounts. Fractional shares and micro-investing supported. Account options. Taxable and retirement accounts. Educational accounts are limited. Automation. Auto deposits available. Rebalancing is basic. Cash management. Idle funds earn minimal interest. Extra perks. Focus on financial education and beginner tutorials. Verdict. Best for beginners who want guidance while starting small and learning the ropes of investing. How they compare side by side. Let's think about these apps in terms of strengths instead of a table. Smart Invest is all about simplicity and hands-off investing. Growth Plus shines with flexibility, high-yield cash options, and rewards. Easy Wealth emphasizes education and habit building for newcomers. Each app has a slightly different focus, so your choice depends on your goals and comfort level. Choosing the right app for you. Here's a simple way to decide. Pick Smart Invest if you want minimal effort, low stress, and steady growth. Choose Growth Plus if you want more tools, perks, and control. Go with Easy Wealth if you're a beginner who wants guidance and a learning first approach. Try a small deposit first to experience automation, usability, and fractional investing before committing larger amounts. Taking the next step. Create a short checklist for these 3 apps. Note where each app shines in profitability, ease of use, fractional investing, account options, automation, cash management, and perks. Decide which strengths align best with your goals. Test the apps lightly and see which one feels the most intuitive for your investing style. This method ensures that you choose an app that fits your lifestyle, supports consistent investing, and helps your money grow. We've reviewed the first two groups of investing apps and explored what makes an app beginner-friendly, profitable, and easy to use. In this action, we'll focus on narrowing down the finalists, the apps that truly stand out across all categories and are worth your time and money. At the end of this step, you'll have a clear idea of which platforms deserve serious consideration. Identifying the standouts from our evaluations, certain apps have consistently performed well in key areas: profitability, low fees, diverse investment options, and tools that help grow your money, ease of use, intuitive dashboards, clear navigation, and helpful tutorials. Flexibility, fractional investing, and multiple account types. Automation, automatic deposits, and smart portfolio features. Cash management, options to earn interest on uninvested funds. Extra perks, rewards, educational content, and bonus programs. Apps that score high across all these areas are the ones we'll focus on as finalists. Which apps made the cut? Based on our previous reviews, these platforms stand out. Acme Invest, known for simplicity and strong growth potential. Ideal for beginners who want a no-fuss investing experience. Bright Future offers flexibility, high-yield cash management, and bonus features like investment reward cards. Perfect for users who want more control and perks. Smart Invest, excellent for hands-off investing with automatic deposits and portfolio management. Great for busy beginners or those who prefer passive investing. Growth Plus, flexible and feature-rich with high-yield options and educational tools. Best for investors who want extra perks without overwhelming complexity. These apps consistently performed well across profitability, usability, automation, and perks, making them strong finalists. How to compare the finalists? Now that we have the top apps, it's time to compare them in real-world terms. Ease of setup. How simple is it to open an account and link your bank? Investment variety. Are the stocks, ETFs, and funds you want available? Automation features. Can you schedule deposits and set up recurring investments easily? Cash management. Does uninvested cash earn interest or offer other advantages? Extra perks. Do rewards, bonuses, or educational content add real value? Testing these areas with a small deposit can help you experience the apps firsthand and see which one fits your needs best. Thinking about your goals. Choosing the right app isn't just about features, it's about your personal goals and habits. If simplicity matters most, Acme Invest or Smart Invest are ideal. If flexibility and perks matter, Bright Future or Growth Plus are strong choices. If learning while investing matters, Growth Plus has excellent educational tools. Remember, the best app is the one that aligns with your goals, encourages consistent investing, and makes growth easy and stress-free. Making the final decision. Here's a practical approach. Finalists from the list above. Open a small test account with each to explore usability and automation features. Track your experience for a few weeks. Are deposits seamless? Is navigation intuitive? Do perks add value? Review fees and returns over the first month to see how profitability is impacted. This hands-on approach ensures you pick the app that fits your lifestyle and goals. Moving forward with confidence. Narrowing down finalists, you've simplified the overwhelming world of investing apps. The next steps involve choosing your main app, setting up automation, and starting small. From there, consistency and smart investing habits will help your portfolio grow over time. Even if you start with one app and decide to switch later, this framework gives you confidence in making informed decisions instead of relying on hype or guesswork. Now you've narrowed down your finalists and have a good sense of which investing app fits your goals. The next step is to set up your account properly and create an automated investing plan. This step is crucial because a well-structured setup and consistent automation make your money grow with minimal effort. Getting started with your chosen app. Once you've selected your investing app, the first task is to open an account. Most apps make this process fast and beginner-friendly. Here's what to expect. Provide personal information: name, address, social security or tax ID, and employment info. Link your bank account. This allows deposits, withdrawals, and automated transfers. Choose your account type. Decide whether you're opening a taxable account, Roth IRA, traditional IRA, or another option based on your goals. Take your time during setup. Accuracy now prevents headaches later with transfers, tax reporting, or account access. Deciding on your initial investment. After your account is open, the next step is to decide how much to invest initially. Beginners don't need to start with a large sum. Small amounts work perfectly, especially with fractional shares. Start small. Even $50 to $100 can be enough to test the platform and begin building habits. Focus on consistency. The key isn't the initial deposit but how often you invest over time. Diversify early. Use fractional shares to spread your investment across multiple assets. Starting small helps you learn the app and gain confidence without risking too much upfront. Setting up automatic contributions. One of the most powerful features of any investing app is automation. Setting up recurring deposits ensures you stay consistent, even when life gets busy. Choose your frequency. Weekly, bi-weekly, or monthly deposits work best for most beginners. Decide on the amount. Pick an amount you can comfortably invest without impacting your regular expenses. Enable rebalancing if available. Some apps automatically adjust your portfolio to maintain your target allocation. Automation turns investing into a set-it-and-forget-it habit, which is one of the most reliable ways to grow your portfolio over time. Organizing your investments. Once automation is active, think about how your investments are allocated. Diversify. Spread your money across stocks, ETFs, and bonds to reduce risk. Focus on goals. Align your allocations with your objectives, whether retirement, short-term growth, or learning. Adjust over time. As you gain experience, you may tweak your portfolio to match your risk tolerance and goals. A clear allocation plan helps you stay disciplined and avoid impulsive decisions based on market fluctuations. Using additional features to boost growth. Don't forget to explore any extra features your app offers. High-yield cash management. Make sure idle funds earn interest until invested. Rewards programs. Some apps let you earn rewards or cashback and automatically invest it. Educational tools. Webinars, tutorials, and articles can help you make smarter investing decisions. These small advantages can compound your returns and improve your investing experience. Monitoring progress without stress. Finally, set up a routine to check your account periodically without obsessing over daily fluctuations. Monthly review. Track contributions, growth, and any automated transfers. Adjust when needed. Reallocate funds if your goals change or if you want to explore new investment options. Stay consistent. Avoid reacting to short-term market swings. Automation handles the discipline for you. With this system, investing becomes a habit, not a hassle, and your portfolio grows steadily over time. You've set up your account, automated contributions, and started investing consistently. Now it's time to monitor how your portfolio performs and make adjustments when necessary. Tracking progress ensures that your investments continue to align with your goals and helps you grow with confidence. Checking your progress regularly. Even with automation, it's important to review your portfolio periodically. A simple monthly check-in is usually enough. Review contributions. Ensure your automated deposits are being processed correctly. Check growth. Look at how your investments are performing compared to your goals. Analyze allocation. Make sure your portfolio still matches your desired balance of stocks, ETFs, and bonds. Keeping an eye on your progress helps you stay aware without obsessing over daily market fluctuations. Making small adjustments. Your investment plan shouldn't be static. Life changes, and your portfolio should reflect that. Rebalance when needed. If one asset class grows faster than others, adjust your allocations to maintain balance. Increase contributions. As your income grows, consider raising your automated deposits to accelerate growth. Explore new investments. Gradually add new ETFs or stocks that align with your long-term strategy. Small, deliberate adjustments keep your plan aligned with your goals while avoiding impulsive decisions. Using app tools for insights. Most investing apps offer helpful features to make tracking easier. Performance dashboards, visual charts, and reports show growth over time. Goal tracking. Some apps let you set specific goals like retirement or emergency savings and track progress automatically. Alerts and notifications. Set alerts for account activity, dividends, or important milestones. These tools make it easy to stay informed and take action when needed. Staying patient and consistent. The most important part of tracking performance is maintaining patience and consistency. Markets fluctuate, but long-term growth comes from regular investing, diversification, and disciplined habits. Avoid making rash decisions based on short-term changes. At this point, you've set up your account, automated your investments, and started tracking your progress. The next key step is learning how to avoid common beginner mistakes and stay disciplined over the long term. Even small missteps early on can cost time, money, and confidence, so developing good habits now is crucial. Don't panic during market fluctuations. One of the most common mistakes beginners make is reacting to short-term market changes. Stocks go up and down every day. That's normal. Avoid emotional decisions. Selling during a dip can lock in losses. Remember, investing is a long-term game. Stick to your plan. Your automated contributions and portfolio allocations are designed to ride out volatility. Focus on growth over time. Look at your portfolio over months and years, not days or weeks. Keeping a steady mindset prevents panic-driven decisions that could derail your progress. Consistency beats timing the market. Trying to time the market buying low and selling high is extremely difficult, even for professionals. Beginners often waste money and miss growth opportunities by overthinking entry points. Stick to automation. Your scheduled deposits ensure consistent investing regardless of market conditions. Embrace dollar-cost averaging. Buying consistently over time naturally reduces the risk of investing at a high point. Avoid overtrading. Excessive buying and selling increases fees and reduces overall returns. Consistency is far more powerful than trying to predict market movements. Don't ignore fees and account types. Another beginner mistake is overlooking fees and account structures. Small charges can add up over time, reducing your long-term growth. Compare fees. No trading fees, account maintenance costs, and any hidden charges. Maximize tax advantages. Use retirement accounts like Roth IRA or traditional IRA whenever possible. Choose accounts wisely. Align your account types with your financial goals. Taxable accounts for short-term investing, retirement accounts for long-term growth. Awareness of fees and account types ensures your money works as efficiently as possible. Diversify to reduce risk. Beginners often put all their money into a single stock or sector, which increases risk. Diversification spreads your investment across multiple assets, reducing potential losses. Use ETFs or index funds. These automatically include multiple stocks or bonds, creating instant diversification. Fractional investing helps. Even with small contributions, you can invest across many assets. Review allocation periodically. Adjust based on your goals and risk tolerance, but avoid constant over-tweaking. Diversification is one of the easiest ways to protect your portfolio without complex strategies. Avoid chasing hot tips. Social media, friends, or forums often push hot stocks that promise quick gains. This is a common trap. Stick to your plan. Follow your strategy rather than chasing trends. Research thoroughly. Don't invest based on hype. Check fundamentals and your app's research tools. Stay patient. Long-term growth comes from disciplined, steady investing, not short-term speculation. Avoiding hype ensures your portfolio grows safely and predictably, building discipline through habits. Discipline comes from creating routines and sticking to them. Schedule monthly portfolio reviews. Keep automated transfers active. Track your goals and celebrate milestones. Over time, these habits build confidence and reduce the temptation to make impulsive decisions. Taking action today. Stay calm during market fluctuations. Focus on long-term results. Stick to automated investing and avoid overtrading. Monitor fees and optimize account types. Diversify your portfolio to reduce risk. Ignore hot tips and social media hype. Follow your strategy. Avoiding common mistakes and maintaining discipline, you'll ensure your investments grow steadily and sustainably, building a solid foundation for financial success. You've mastered setting up your account, automating contributions, tracking performance, and avoiding common mistakes. The next step is to scale your investments over time. Increasing your contributions strategically allows you to accelerate growth and take full advantage of compounding. Start small, then build gradually. Even if you began with modest contributions, that's okay. The key is consistency. Once you're comfortable with your routine, increase gradually, add small increments to your automatic deposits over time. For example, increase weekly contributions by $10 to $20 each few months. Avoid overstretching. Make sure your contributions remain manageable relative to your income and expenses. Reinvest returns. Any dividends or interest earned should automatically go back into your investments. This reinforces growth without extra effort. Scaling slowly reduces the risk of financial strain while steadily building your portfolio. Take advantage of raises and bonuses whenever your income increases. Use a portion of that boost to increase your investments. Allocate a percentage. For instance, commit 50% of any raise or bonus to your investing account. Boost automation. Update your recurring deposits to match your new contribution target. Stay consistent. Avoid the temptation to spend the extra income entirely. Small adjustments compound over time. Linking increases to extra income rather than cutting expenses, you grow your portfolio without feeling financial pressure. Review and adjust your allocation as your portfolio grows. Your original allocation may need adjustments. Maintain balance. Ensure your mix of stocks, ETFs, and bonds still reflects your risk tolerance. Rebalance periodically. Many apps offer automatic rebalancing to keep your allocations on track. Explore new opportunities. Gradually introduce new investment options like niche ETFs or bonds while avoiding overly risky speculation. Proper allocation ensures your portfolio remains diversified and aligned with your long-term goals. Using milestones to stay motivated. Tracking milestones is a great way to stay motivated and disciplined. Set quarterly or yearly growth targets. Celebrate when contributions or returns hit specific goals. Track the impact of scaling your investments to see compounding in action. This visibility helps you stay committed and encourages you to continue increasing contributions over time. Leveraging automation for growth. Automation becomes even more powerful as you scale. Increase recurring deposits automatically. Set your app to increment contributions after each milestone. Reinvest dividends automatically. Let your returns grow without intervention. Monitor, don't micromanage. Automation allows you to focus on the big picture instead of day-to-day fluctuations. The beauty of automation is that your portfolio can grow consistently and stress-free. Taking action today. Review your current contribution levels and plan small incremental increases. Use extra income or bonuses to boost automated deposits. Rebalance your portfolio to maintain diversification as your investments grow. Set milestone goals to track your growth and stay motivated. Continue leveraging automation to make scaling effortless. Gradually increasing your contributions, keeping allocations balanced, and relying on automation, you'll maximize the power of compounding and accelerate your journey toward financial freedom. This is where everything comes together. You've learned how to choose the right investing app, automate your deposits, track performance, avoid beginner mistakes, and scale your investments. Now it's time to focus on long-term habits that help you build real wealth over time. Success in investing doesn't come from luck or perfect timing. It comes from simple systems repeated over many years. Turn investing into a lifestyle. The best investors don't try to invest, it becomes part of their lifestyle. Think of investing like going to the gym. You don't work out once and expect results. You show up consistently. Here's how to make investing automatic in your life. Keep automated deposits active. Reinvest dividends. Use reminders for monthly reviews. Avoid emotional decisions when investing becomes a habit. Growth happens in the background of your life. Review your goals every year. Your life changes and your goals will evolve over time. That's why it's important to do a yearly financial check. Up. At least once per year. Review your long-term goals. Adjust your contribution amounts. Rebalance your portfolio if needed. Update your risk tolerance based on your life stage. This keeps your plan aligned with your real future, not just your past decisions. Keep learning without overcomplicating. You don't need to become a financial expert to succeed. You only need strong fundamentals. Focus on learning how markets work long-term, the power of compound interest, risk management, diversification. Avoid getting trapped in complex strategies or hype. Simple strategies followed consistently always outperform complicated plans that aren't followed. Protect your wealth as it grows. As your investments grow, protecting your wealth becomes just as important as growing it. This means keeping emergency savings separate, avoiding high-risk speculation, using secure passwords and two-factor authentication, choosing reputable investing platforms. Smart protection ensures your wealth stays safe while it grows. Think in decades, not days. The real secret to wealth is time. The market will go up and down. News will be scary. Social media will push hot stocks. Ignore the noise. Focus on long-term consistency, monthly habits, yearly review, stable growth.